Good morning, ladies and gentlemen. How's everybody doing today? Good morning, good morning, morning. So anyways, a couple things to talk about. Today isn't really so specific on particular stocks, but more or less particular, well, I guess it is kind of on stocks, but more or less particular on the market, gold, and maybe one stock or a couple stocks, depending on what we do. But generally, really just want to discuss what's going on in the market, and again, things to pay attention to. So let's jump into it. We're going to go straight to one screen here. So first things first, let's take a look at the SPY. All right, so if you're not familiar by now, we already know that it went into an all-time high. One's here, down, one's here, down, one's here, down, next time, down. So far, we're generally pulling back every time we get into a new all-time high. For one, just in like a technical, side of things. Two, the 272 down here, that's a very significant buy level, okay? What you're seeing right now is we're seeing the price action of the SPY just pretty much break through, break through the 290 support. This is where I was considering a dip buy last week before market closed Friday. Wake up today this morning and it's directly below that support. So now not as interested as buying the market now. Next level to pay attention to would be 287, this structural system right here, structural support. That would be the next level to pay attention to, 287. But, well, you named it. This, to me, for some reason, I got a good feeling this isn't going to hold. Part of the reason that's doing that, and maybe it will, honestly. If it does, it's great. If it doesn't, it's great. But it's really just this really aggressive down move into this level that makes me a little bit more hesitant to wanting to buy the market at this dip. All right, so let's walk down this path with me for a sec. So if we do go below the 287, right? We do break 287. Wouldn't be surprised if we have kind of a break below, then a bounce back up, and this could start, a short-term downtrend down to your 274. So what I'm getting at is if we don't hold here this week, right, don't be surprised to see this kick down towards 274. Well, this is 274. Why? Yeah, 274, 272. Yeah, 273, 272 right here. Don't be surprised to see it drop down to that level. And if it does, I would be buying it right there, at least for a swing trade, okay? So there's a couple things out here in regards to why the market's moving the way the market's moving, and you guys know it. In terms of catalyst, it's the same as it has been for the past 4 years, 3 years. Trade war, trade talk, this war, that talk. Right, so everything's basically happening the way we said it would happen. Not just myself, because I'm not just that much of a genius, but people like yourselves, people on Facebook, people on Twitter, other YouTubers, other news stations and news outlets. Anybody that wanted to use their brain could figure this one out. Ideally, it's like two children, like your two kids that are so stubborn that they just really don't want to give in to one another. Like one of them's like, no, it's mine. And then the other one goes, no, it's mine. And then you end up sitting there fighting between a toy in between two kids, and they're just tugging on it back and forth. And neither one of them wants to give it up until dad walks in the room and smacks both of them in the head and just takes it away completely. So that's really what's going on. And it wasn't too hard to figure that one out. So anywho's, so we got the markets going lower because the trade war and the trade talk really isn't progressing. They kept saying it was progressing, but we all knew that was just smoke and mirrors, that it wasn't really progressing, and so on and so forth, blah, 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 blah. And a bunch of people are losing jobs over in China. You can see that the farmers are getting hurt here in America. So the trade war isn't really helping either side in the current moment in time. So again, that's short term. Long term, it could be really good for America, but you're going to have to go through the short term pain, right? And that's the problem that we're facing right now is a trade war isn't good for right now. A trade war deal can be great for later. And that's what more people aren't understanding is they're so focused on the short-term aspect of this deal and this war, so to speak, that they can't wrap their head around what it could be later on, okay? So anyways, market's starting to go lower. So you're going to start seeing a lot of equities selling off today, right? You're seeing a lot of equities. All right. Now I want to jump over and talk about gold. GLD. I know I've been talking about this, but why would we not be talking about this, right? I know it's been on the watch list periodically, frequently, for the past couple weeks, but why would we not be talking about gold? It is like the one thing that's on a clear bullish move, bullish trend in the market. I mean, there's other stocks, sure, but I mean, this thing is clear as day. I mean, I picked up more shares just the other day on this. It was Friday. I picked up more shares. I'm like, this thing's going to break out. It is a completely bullish chart. I'm like, it's definitely going up, so I'm buying. Right? And look at that bullish engulfing candle there. It's crazy. So anyways, gold is looking very, very well, and this is probably where you should start putting some money. I've only been saying it for 3 years. So I really hope a couple people paid attention. That's all we need, just a couple. So now we want to look at like a 20-year chart, and I'm going to take a second here. I'm going to look at some of the comments and the questions and go over those here in about a couple minutes, right? So this isn't the chart time frame I really wanted to look at. I wanted to look at 20 years. Oh, excuse me. No, not on GLD. I wanted to look at the gold futures, excuse me, but also GLD. So now we're looking at the gold futures, right? And you can see that gold futures generally mimic, or well, the GLD ETF generally mimics, right, gold futures. Okay, so whomever, which way you want to find yourself investing within gold, that's up to you. Okay, a lot of ways. So right now we're looking at a 20-year monthly chart. Okay. Does anybody notice anything really significant about the 20-year chart here and just this monthly time frame? Anybody know anything drastically significant? Well, beyond the fact this is just like an uber bullish chart for right now, and then of course I could change, but for right now it's very bullish. And it actually has nothing to do with the chart. There's nothing about this chart. Well, of course it has to do with the chart, but what I'm really saying is look at the volume. Look at that massive volume increase over the past 3-4 years, right? I mean, it was pretty much stagnant at about an average 3.5 million. Now we're up to like 7-8 million. So we've doubled in volume over the past 4 or 5 years, right? You can clearly see this thing is picking up in volume, right? There are more people are buying gold. Okay, gold has always been seen as boring and slow, and yeah, sure. But I know it's more fun. Well, you want to know what's better? Well, no, wait, seriously. You want to know what's worse than boring and slow? When your equities lose 50% fast. So, does this look like a bad move to get on? You remember, you see it back here in 2008, right? I mean, is that a bad move to get on? I mean, that only went up. Let's see. Beginning of 2008, we drop out, and then we bounce. I mean, gold only went up 187% from the beginning or start of the 2008 Great Recession. It only went up 187%. Sounds pretty good to me. From the current levels we're at, right? Is it too hard to believe that this could at least go into a formation of a double top? And if so, that's going to put you up towards 1800. So from where we're basically at, I mean, that's about a 45% increase. I mean, of course, you'd have to get over that to get higher than about 50-30%. But that's a good move, right? So I think that's really where a lot of people should be focusing their energy, is within the precious metals and gold market for right now. Again, there's no reason. You guys should look into how much other countries have been buying up gold for like the past, many years now. Actually, it's quite impressive and interesting. Yeah, I mean, and things like JNUG, they're all going to be moving, right? I mean, things like JNUG, they're all going to be moving. These are 3 times leverage ETFs. So, again, if you're not familiar with the 3 times leverage ETF, yes, of course, they can be a little bit risky and blah, blah, blah. But at the end of the day, the way that these 3 times leverage ETFs work is whatever underlying market that they are associated with. So like JNUG is associated with the gold market, right? So if gold, for example, has a 1% increase in price value, then JNUG should have a 3% or pretty close to 3% increase in value. Okay, if gold goes down 1%, JNUG is going to be down 3%. If gold goes down 2%, JNUG is down 6%. If gold goes down 5, then JNUG is down 10, or sorry, 15. Right? That's generally how that'll work. No, GLD is not the only gold play. You could trade the gold futures market. You could trade gold futures. You could trade gold barracks, which is a gold stock. There's many mining companies out there. I think GDX is another one. Yep, this is another ETF. This one's about $28. So there are cheaper and more affordable routes to getting in, sure. For me, it will be GLD because I'm not worried about getting things inexpensive with as amount of money shares as I can to make the most money I can. That's not my goal. My goal is to hedge and hopefully make some money throughout the next economic recession by being hedged in the right positions. And what I do know is that the ETF GLD is of probably the most popular gold trading ETF, right, with the most volume. So for me, it makes sense to be invested in something that is the most popular, the most heavily traded gold, kind of security, and that's GLD. So it all depends on how you want to do things, right? No, I didn't add to silver because I was already pretty heavy in silver to begin with. So I just really added a little bit to gold. And then what I will be doing probably later this week, I haven't done it yet, but what I will be doing is I'm going to be moving my long-term, not all, but one of my long-term portfolios, my biggest one. I'll be moving a 50% allocation into precious metals and things like that. And the other 50% will remain in equity. So I'm going to be decreasing 50% of my exposure to equity markets and increasing my exposure 50% to the precious metals market. And that's something that I suggest many do. Okay? And remember that you have to do it sooner rather than later. Because think about it. Think what I just said I'm doing. I'm selling 50% of my equity long-term positions. There are probably many people who are going to start doing the same. When everybody starts to sell, the market goes down. Think about that. Play in precious metal? Yep. And again, right, of course, feel free to speak to someone, reach out to other people. Don't just go based on what I'm doing. There's many other people that you can find online and YouTube with great information. They probably even know more than me when it comes to specific stocks and specific ETFs. And, I don't know everything, but I'm pretty good at just understanding, the basics of what you should be doing in certain times, right? You don't have to be a rocket scientist. So, take some time, right? Read some things, learn some things, but keep an open mind, right? Because not everybody's right, and not everything makes sense for the next person next to you. And don't listen to exactly everything you hear and take it as, a sure thing. Always take the information with a little bit of a grain because, of course, anybody could be wrong, right? And again, it doesn't necessarily mean it's going to meet your style particularly. So again, consider that. You could buy physical gold. You could buy the ticker GLD. You can buy GOLD. You could buy GDX. You could buy JNUG. I mean, again, right? Take some time and do some research and see what kind of gold products are out there. One of them might work better for you. One of them might work better for somebody else. Okay, so you do have to take some time to look into these things. But for me, I think the precious metals markets is where you're going to want to be for the next 3.5, 4 years, 5 years, not in equities, right? I think after about 4 years, 5 years, equities are going to want to, you know, 3 to 4, 5 equities are going to want to start wanting to be back in. If this is a traditional bubble that pops, you'll want to be back on equities in 4 to 5 years. If this is not your traditional bubble and there's something that's bigger underlying, it could take longer for the market to recover. I think it's Japan's market. I mean, I'm pretty positive it's Japan's market that crashed like back in the 80s or something like that. And their market never recovered, right? So like the whole concept of buy low, sell high, it really didn't work very well for most people who did, because they bought when the market was low and the market never recovered, ever. So the whole concept of buy low, sell high clearly doesn't work 100%, because it only works if the markets recover. And when you have someone like the Federal Reserve who creates the bubbles and takes you out of the bubbles, if they change monetary policy or go off of fiat currency, which we currently are on, then we could be looking at a completely massive, shift in the way our markets work within the next 10 years. Okay? All the things we've been seeing from the Great Depression to now, all these big booms and big busts, it's all due to the current monetary policy that we all so believe in. Without that, we don't have the economic boom and we don't have the economic bust in the way that we're seeing it right now. It will change. How it changes, I don't know, but it will. Okay? Because the system we have is built up on fiat currency, which is your paper in your pocket, which is really worth nothing. It's absolutely nothing. Whoever thinks they have $1 trillion really doesn't have $1 trillion. If you think you have $1,000 in your bank account, you don't even have $1,000. You might have like 20 or something. Okay, I don't really know what the exact. I can figure it out, but you have no money. Jeff Bezos is not rich. Actually, he's actually poor, kind of. Okay, but because we believe that the dollar actually has value, then we believe that Jeff Bezos is actually rich. But if you actually know so, he's really not that rich with the amount of money he has. He's like kind of rich. So our fiat currency system is built on belief. Okay, you have the Federal Reserve. You guys know the Federal Reserve by now. You know that we have the FOMC meetings like once a month, right, or whatever. So you know who Mr. Powell is. Okay, so you know the Federal Reserve, and you know that they print money into our economic system, right? So while you and I go to work, and we may work 10 or 12 hours a day, and maybe we make $100 or $200 or whatever it is, right? There's someone behind our back just printing more money. So while they make us go out and slave for it, they just print more of it. And they consistently slap us in the face and go behind our back and stab us in the back by devaluing what we're working for. We go out every day and we work to make money because we have to in order to afford a lifestyle and or things and or family security that we want, while they just go behind our back and stab us and continue to print more and devalue what it is that we have already worked for and are currently working for and will be working for. They devalue it every single time they print money. So your dollar, instead of being worth $1, is worth like a penny. Seriously, look it up. Your dollars are worth pennies. I don't know the exact, but your dollar is worth pennies. And now people go, well, how is my dollar worth pennies when I go and buy a $5 coffee, I'm still giving $5? Let me explain. Back in the day when you were actually on the gold standard, okay, and that's a whole nother discussion. Back in the day when you were on the gold standard, okay, when you're on the gold standard, you could walk into, I don't know what they were called back then, but everybody right now should know what a Men's Warehouse store is. They're a clothing store for men that sell suits, right? So let's imagine like when we're back on the gold standard, some odd 50, 60 years ago, whatever, that we were going to a Men's Warehouse, right? We had some event coming up and I needed to buy a suit. I could go into the Men's Warehouse store with a 1 ounce, $20 gold coin. And I could walk in there with a $20 paper fiat bill. Okay? And I could buy a really, really nice suit with the $20 gold coin. And I could buy the same exact really, really, really nice suit with a $20 bill. Okay? Today, if I walk into Men's Warehouse, I can buy a really, really, really nice suit with that same gold coin from 50 years ago, because gold is worth about $1,300. Excuse me, I was getting choked up there. It's worth about $1,300. So that same gold coin that was $20 is now $1,300. I can still buy the same suit, maybe even better, with the gold coin. But if I go into Men's Warehouse today with $20, what do you think I'm going to buy? Not even a suit, not even a tie. I might be lucky to get like a mint when I walk in the door. You know, their little candy thing. That's how it works. Back in the day, your gold coin bought you a really nice suit, and so did your $20 bill. Today, your gold coin still buys you a really nice suit, but your $20 bill doesn't get you shit. And you can say thank you to our Federal Reserve and our government bodies for continuing to go behind our back and devalue our currency based on economic policy that they think they should be doing. Based on, oh, well, we have to bail out big banks, so we'll print more money, or we had to bail out GM and Ford or whatever, so we'll print more money. That's not the answer. I'm sorry to say it, but you have to let them fail. You should not have bailed out big banks. You should not be bailing out car companies. If my business goes underway, do you think the Federal Reserve is going to print money and give me a check so I can keep doing my thing? No, they're going to just say, screw me, right? So that's the system we're built up on. We're built off of a system where our currency really isn't worth anything, okay? So now that we've touched on that, there's one last thing I want to talk about, and that is, was it ALLK? Was this the one? I think it is. Yep, this is the one. So this is the other only stock that I was really kind of concerned with. There's going to be a lot of things moving today. Mark my words. Like things are probably going to move today. But, you know, it's Monday. I don't really know exactly how I'm going to trade. I kind of want to see how the market performs and what's going on. But ALLK reports earnings. It goes from $30, sitting at a high of $64 pre-market. There's probably money to be made on the stock today. It's trading in relatively low volume right now, so there's no guarantee that when the market opens, it's going to trade, you know, super fantastic. But I mean, it's very appealing. This is interesting. It's definitely something that you should probably watch. Okay, so I know a lot of comments came in here. Let me take a quick look at some things. No, I don't think that silver and like gold went down for. I mean, they all go. Everything goes up and goes down for a reason. But no, the market wasn't being solely manipulated, so prices could be lower because people would know they would go higher. No. Robert, what is a 50% I'll hold long term? That I'm not sure yet. Like I said, I'll be changing it around this week, so I'm not quite sure just yet, but I will be. How can you set the chart in future years? You can't really set the chart well, I mean, it's called expansion area. Basically, it's in here. You just go up to your gear icon and it's under time axis. Yeah, so go to the gear icon on any one of your charts and then go to time axis, expansion area. I mean, Netflix will probably bounce. There's like a small little level that Netflix could bounce at, which is like right here. Not there, excuse me. Like right here, I mean. But if you bounce here, don't anticipate. Like this is the way it works, right? We've gapped down, we bounced, we've rolled over, we're back down towards like a support area, so we'll probably bounce. But we're not going to bounce over the previous high right here. We'll stay within this high to this low until it channels in consolidation and breaks either up or down, which could take multiple weeks. So unless you're holding calls that got, you know, a month and a half, 2 months, you'll probably expire worthless. Exactly just what B Custom said. The move that you're going to need to regain the loss on the option is bigger than what's going to come. Exactly. Perfectly said. So if the government stopped printing money, then the value of our currency would literally stay the same, or it would actually go up as money gets taken out of circulation in theory, right? So, I don't know the exact steps that would be necessary, and I don't want to speak too broadly here because, of course, I'll say something that's incorrect, but it's hard to go back. That's the problem. It's very hard to go back. That's why, it's like habit, dude. Like once you start a habit, like when you start smoking, it's really hard to stop smoking. Once you start drinking and enjoying company and time, it's hard to stop that lifestyle, right? So once you start printing money and you built on a fake economy, it's hard to stop that because you're gonna have to go through really, really terrible times in order to see the grass is greener on the other side, right? Like it's really hard, right? Like for someone who has an addiction to something like opioids, it's hard to get off that. But when you do, the grass is greener on the other side. It really is. It's hard to see it at first, and that's also because you're getting smacked left and right, and you got the cold sweats, and you're trying to get it out of your system, and you're in a hospital. You think you're gonna die. Next thing you know, you're hallucinating. You think you saw the Lord Christ Himself playing video games in your living room. I mean, it's so painful to try and get off something. It's just like this. I mean, to go back to a gold standard, to change the current monetary policy and what we've been doing for so long, it's so hard that it's almost impossible, right? That's what it comes down to. With that being said, I gotta run, everybody. Everybody take care. Have a great day. Thanks for tuning in as always. Do appreciate it. I have a new streaming setup that will be coming in the next couple days, so I think you guys will be happy to see that. Other than that, guys, take care. Stay green. Don't get too aggressive today. There's no need. The market is a little bit shaky right now, so take your time. Be patient. You don't even have to trade. It might be one of those better times just to sit and watch the market, see how things develop for the coming days, and you might be able to be more profitable throughout the week as things show their face more. All right, guys, take care and have a great day.